So Bitcoin is now almost trading at $20,000 as I'm making this video, and the worst might still be yet to come. So that is why I'm making this video. I know I'm making videos like every day, but there's so much happening in this market. So I want to explain a little bit what is happening, why there are funds that are blowing up, getting liquidated, and why it's causing this downward selling pressure that might still lead to a final capitulation, potentially even today, as we still have the FOMC interest rate decision in the US that is coming out later today at 2 p.m. Eastern. So let's dive straight into this. By the way, guys, if you do enjoy these updates, please smash the like button on every video. It helps it get out to more people. Subscribe to the channel if you are new here, you want to get updates, get on my email list. It's the first link in the description down below. And if you want to follow on Instagram, Twitter, or join the free public Telegram, the links are in the description down below. All right, so what is happening here? There are a lot of seemingly big players that are about to get liquidated or getting liquidated or have already been liquidated. Simply what this means is that during the bull market, they took on too much. They got greedy, they overextended, they invested, maybe they used leverage, maybe they have leverage positions, and now that the market is dropping and dropping significantly, those positions are getting margin called, meaning they need to add collateral, and if they don't have that collateral, that they get liquidated and the market just sells off more and more and more, or they are becoming forced sellers, meaning that the assets that they do have that might be locked up, they might be forced to sell their remaining assets, their Bitcoin or their crypto assets, to be able to cover margin calls or potentially pay out customers where the funds have been promised. So there is really seemingly a lot of unwinding here going on, and I just want to share some examples here. So for example, Celsius was a big one. It is supposed to be this third-party platform where you can deposit your crypto assets and get yield on that, and it seems we don't know what the details are, we don't know the internals of what has been happening, but it seems like Celsius may have taken positions and locked up certain funds or taken part in leveraged positions with DeFi and things like that. Again, nobody really knows what's happening, but again, the rumors here are that Celsius might be insolvent and might not be able to pay out their customers, which is why they have officially, this is for sure because they sent out this notice to their customers, they officially froze their withdrawals and deposits. And basically then we had a competitor, which was Nexo, to offer to buy the firm's asset. But basically they could be in a lot of trouble where the price of crypto has dropped and they just don't have the inflows. Basically, this could actually even be a Ponzi scheme. I'm not saying it is, but maybe one of these days the truth could come out. And what happens if they were taking on new customer funds to pay out existing customers? Basically the classical definition of a Ponzi scheme. And when the inflows stopped coming in, when the new money stopped coming in, they couldn't pay out the existing customers and the whole thing collapses. That is what a Ponzi scheme is. Now, we don't know what is going to happen with Celsius, but they seem to be having issues since they paused the withdrawals. And that's just Celsius. Then we have this. So basically, after facing hundreds of millions of dollars in liquidation, a crypto fund called 3 Arrows Capital, the future is uncertain. And again, this is all still speculation. We don't really know the exact details of what is happening behind the scenes, how bad things really are, if it's as bad as it seems or if it's worse than it seems. But basically what is happening is funds and big players and even protocols, maybe DeFi protocols, third party like we have Celsius, they are potentially blowing up or about to blow up or in the process of blowing up, which is adding the selling pressure to the markets. And this is what tends to happen anyways. Towards the very end of a bearish trend, we get that final capitulation, that final wick down, which is basically the last resort sellers or the people who have been holding on as long as possible. They finally capitulate, they either get liquidated or they're forced to sell whatever they have left, and we get that final huge candle down of 10 or 20 or 30%, maybe even more in a single day to mark the end of that bearish trend. And then usually we get a period of recovery or multiple months of sideways trading before we get any sort of new trend once again, and that is what seems to be happening. So you can see, I'll just show you a few tweets right here. Also, Raoul Pal, basically this was on October 29th. He said, just to be clear, I'm more than irresponsibly long Ethereum right now. And October 29th was basically the very top of the whole crypto bull run. So at the top, he tweeted this and he has leverage even on his positions via calls. So this is by far the biggest personal position of my entire life by a factor of 10 or more at the top of the bull market. So again, this kind of shows that, you know, these very influential figures in the financial space, just because they have hedge funds or they're VCs or they've been successful in their career in the past, does not make them, you know, the best traders in the world. In fact, we are seeing right now that it seems like they took on way too much greed towards the tops of bull markets, and if they didn't manage that greed, if they didn't unload positions, if they didn't take profits, with the market being down as much as it is right now and still having that selling pressure, you can see a lot of people are getting in a lot of trouble. So that's Raoul Pal. You can see over here also, this is a Twitter account called FatManTerra, who's basically been sharing information about the Luna collapse. I also made a video about that several weeks ago. I'll link to it up here if you haven't seen that yet. But basically, the Three Arrows Capital, what I just shared, that seemingly is getting liquidated for hundreds of millions. What happened here? They allegedly bought 10.9 million locked Luna for $559 million that is now worth $670. And it seems like more and more people are actually in these positions that now that the bear market comes down and the prices come down as much as they are, we are seeing who really got exposed. So it's like that saying, when the tide comes down or when the tide goes out, you can see who's really wearing clothes or not. And in the same way, now when the market is going down, we can get to see who's really overexposed and who's about to be liquidated or who's already getting liquidated because they made really bad, greedy decisions and overextended during the bullish period. You can see here, this is another example of a wallet tagged as 3AC on Nansen, Nansen.ai. That's just a site that tracks cryptocurrency movements on addresses. This is saying it has been aggressively paying back ETH debt against a 223,000 ETH position, right? Which is currently pretty much the equivalent, because the ETH is about $1,000. But obviously at the peak, that was a huge position. If they took out loans against that position, you know, with 198 million borrowings against it, 85% liquidation threshold. Basically what this means, they took out loans against their crypto as collateral, and now that the price is dropping so much, if ETH goes below $1,042, I think it's been lowered a bit because they added collateral at this point, but if the market price of ETH drops below that, the entire collateral gets liquidated to be able to protect the loan that was given out. That's how these smart contract loans work. So this won't be the only loan that's taken out in such a big position. So as the price keeps dropping, there's the risk of all these people who got incredibly greedy in the bull market and took out loans using the crypto as collateral to be able to get even more money to buy even more crypto. It's just another way of derivatives or gambling, or how you ever want to call it. But they have this liquidation risk. So if the price drops enough, these positions get liquidated, and then the price drops even more. And that is when we get that final liquidation cascade, where potentially the price drops 10, 20, 30% in a day in that final candle, wiping out all this open interest, all these leverage positions. Just everyone gets liquidated, and then we can start the recovery process, which will probably take several months at least of trading sideways before we start a new trend. But this is basically the process of markets, booms and busts. We get these crazy euphoric bull markets, and then we get these bear markets that flushes out all the excess greed. And this happens in all markets, by the way, just that happens in crypto a lot quicker. The cycles tend to be, you know, a year or multiple years, versus in traditional markets, it tends to be, you know, 7, 10, maybe 20 years for a complete cycle to play out. So in crypto, it just happens a lot quicker. So that takes me to the chart so that you understand what is happening right now. It does seem we really are in the final capitulation phase, which means that things could end up going really quickly. By the way, it is June 15th. In my video that I made several weeks ago, I said based on the 3-day death cross pattern, the bottom could be in somewhere between 7 and 15 June with a final capitulation wick. So it's going to be very interesting to see if that is going to end up happening today. We also have the FOMC meeting today, which is the decision on the US interest rate, which is expected to be actually very aggressive at 75 basis points. Basically, if interest rates go up, it is not good for the markets, and the markets tend to go down. So we could actually end up getting a real capitulation later on today or in the next couple of days that puts in the final low potentially for the crypto market. So it's going to be interesting to see if that does end up playing out. But either way, that analysis was still spot on about the 3-day death cross coming here somewhere early in May and having a final wick low capitulation 3 to 4 weeks later. That is what we're seeing right now. So How low can this go? That is the question we don't really know, right? It's really going to depend how are all these things going to play out? How much selling is there going to be? How much liquidations is there going to be? How much fear is there going to be in the market? But I don't think it's impossible for this market to still capitulate, technically, even just looking at the chart. So we have this Bitcoin chart here. You can see how much of a range there really is here between, let's just say, about $14,000 and on the downside about 11,000. There is a lot more support here rather than just being at the 2017 all-time high, which we are currently at, as you can see, right? That's just one basically point of confluence over here, and of course over here a little bit, but we are all the way back to this level right now, the 2017 all-time high. If we do get further capitulation, like I said, which is possible based on all the data you've seen, we could maybe get a flash crash or a spike down to maybe as low as $14,000 or even $11,000. But I do expect if that happens, it could end up being a kind of short-term thing where it does rebound pretty quickly and then, go sideways into another range for multiple months. But something like that is a possibility. We see the same thing on Ethereum right now, which is almost about to break $1,000 to the downside. As you can see, we're at $1,038. So again, like I've said many months ago at the beginning of the year, I said there was still a possibility after we got the death cross on Ethereum to go back below $1,000. We are currently back at that process. We have retraced that. And again, in a similar way, if we do really get a capitulation and a sell-off, if we see a lot of liquidations, we can see Ethereum potentially going all the way down to between $400 and $500. As you can see, there is a lot more support and touch points over here as an established range over the last, say, 4 to 5 years, rather than just the all-time high of January 2018, which we are already below right now. That was $1,400. So keep in mind, Bitcoin is currently at the all-time high of the 2017 bull run. Ethereum is already below it. So if Bitcoin is going to follow Ethereum, it means we're going under 20K. And if Ethereum is going lower, we have this touch point over here at around $800. But, if things really sell off and there's an extreme total market-wide capitulation, we could end up seeing $400 to $500 for the bottom of this. So we might actually end up seeing all of this relatively quickly, potentially even today or in the next couple of days. As you can see, things are starting to accelerate. There's a lot of positions unwinding. We have the FOMC. So all I want to say is, of course, be careful, be safe, do not overextend, do not use leverage if you don't know what you're doing. That is the most important thing. And if you have been patient and you're sitting on the sidelines, this final capitulation, if we get it, could end up being really one of the best buying opportunities. And again, there might not even be a rush because we might really see multiple weeks or multiple months of sideways trading in that range after we get it. It's not like we're going to crash and all of a sudden we're going to go straight back up. The environment is really, really bad. Where's the new money coming from to be able to have any sort of like V-shaped recovery? So the most likely scenario is we capitulate, we stay within a range, and it probably takes several months to be able to reaccumulate before anything starts to go in a bullish trending direction. But again, this could end up giving a really, really, really generational buying opportunity, if you want to call it that. Remember, when Ethereum crashed at the bottom of 2018 of the bear market, it went to about $80. And from $80, it went to almost $5,000, not even 2 years later. So keep that in mind. I don't think we're going to get as low as, $100 again on Ethereum. But even if it goes to $400 or $500, imagine if it does in the next cycle end up going to 10,000, that's over a 20x. Given that it's done over a 50x last time, that might actually be a potential scenario. So I just wanted to share this with you so that you have some updates, you have an idea of what is going on. If you like this, please share it on social media, smash the like button, subscribe down below if you haven't done so already. And of course, welcome to get on my email list, the first link in the description down below. Follow on Instagram, follow on Twitter, join the free public Telegram for more updates. The links are all in the description down below, and I will see you in the next video.